Joining us right now is Gene Munster, Loop Ventures founder and managing partner. It has been very difficult to short Tesla over the years, unless you do it for a very short period of time and you catch the right window, Gene.
About the future, I think Phil summed it up so well when Lamborghini talked about a total EV a decade out. And that's the dicey part of this short call ultimately is when you're shorting a theme, it gets really dangerous. I was a sell-side analyst for a long time. I made many of an incorrect call. The most frequent mistake that I made as an analyst was making a recommendation based on valuation when there was a secular theme. Phil's comments about the growth in EVs, it is quite spectacular, and the simple reason I put that as an undeniable truth. And so when I think about investors betting against Tesla for the long term, that's ultimately the question is probably orbits somewhere around market share and ultimately what their market share and will they be successful in autonomy. But I think a risky bet to go against this company long term. And I just want to say one more thing, Andrew, is that the near term, the stock is still up a lot over the past year. It was $160 12 months ago. It's much higher today. And so I'm not saying that the stock has hit a bottom, but what I am saying is for a fundamental short call, it is a headwind to short against this theme.
But if you, let's say you want to own this company or not, and we had this conversation 5 years from now. 5 years, let's give it a full-on 5 years. What do you think the price of the stock is? What do you think their market share is? What does the EV world look like? What does the vehicle world look like 5 years from now?
So the share goes from about 80%, 70% in the U.S. today, 30 and 20% in Asia. I think globally, effectively, market share for EVs will be just car market share. And to answer your question, I think that it's going to gravitate around 20%. If you look at big automotive makers like Volkswagen, that's around 15%. So I think that they will have an outsized market share. If they get there 5 years, to jump forward 5 years, what this company ultimately could be worth, if you get to that 20% mark, and in 5 years we're going to be thinking about 6, 7 years out, you can get to a case where this can be a much bigger company, $2 trillion plus company based on this is the real substance of the bull case, is a business model that is more like a traditional tech model. We've talked a lot about this, but that's the substance of the valuation case, is that if they are successful at hardware, software services similar to Apple, and look at what Apple trades at, about a 6 revenue multiple, you can build a case that Tesla can get there too. And so I think ultimately there's a question around competition, but I think that there is a strong case for long-term investors will be rewarded. Near-term, again, all bets are off.
Shepard Smith here. Thanks for watching CNBC on YouTube.